Welcome back to F.A.C.E Don, Mead. How are you? Waiting for you to unmute.
How's that?
You loud and clear?
Okay.
All right,
now,
Don.
Let's get the picture to line up properly.
All right, we will. All right, so you know it's that green box, says share. It'll be on the top. It's a drop-down menu. You click it, and it'll show your screens, and then you choose the screen you want to show.
I see share screen.
Click it.
I think we're almost there, right?
Yeah, now you're going to get a second window popping up asking you what you want to share. There you go.
Here it comes.
Do you see a chart, a 50-year chart of the New York Stock Exchange Composite?
Yes.
Wonderful.
We got it, Don. Thanks for
Good
helping,
morning,
Steve.
Dale.
Good morning, Don.
For the
That's okay.
confusion, but it's great to be with you.
Yeah, it's nice to have you back, Don. So, you know, it doesn't matter how long it takes you to get good content up there if you get it up. So, all right. So you're quoting Solomon here. He had plenty of gold, didn't he?
Yes, he did indeed. Yes, he did.
The richest man in the world. So he found.
And he also knew that there was a time to gather gold together, and there was the time to cast it apart. And the same with, I suppose, paper assets and stocks.
Yeah. So let me ask you, Don, with what you've seen happen in gold and I know you're focused on the stock market, but you've been around for a while, what you've seen happening to the dollar and the gold, how does this play into your Seven Sentinels work? Does it at all?
My thinking is purely technical,
so we've had this huge recovery. I don't know about you, Don, but after we bottomed in March, I didn't think that we'd see a 33 handle again.
Oh, I didn't either. I certainly didn't either. But what I think this is a continuation of the topping pattern that began clear back in 2017. Again, just to back up just a little bit. I thought it was interesting that King Solomon did indeed say that which is has already been, and that which is to be has already been. And it's really the same thing as Livermore said again and again, which is there is nothing new in Wall Street. Whatever has happened, whatever happens today has happened before and will happen again. So he was just repeating what King Solomon said thousands of years ago, and it is so true. That is the way I approach the market. That's the way I see the market. I see the market as a kind of a wheel within a wheel, and a spiral that just continues over and over and over with the same patterns.
And your special note at the bottom of this chart is of special interest to us is that point in the cycle where 20-week McClellan drops below zero. Are we below zero now?
Yes, we are. And I'm going to get to that in just a second. But looking at this 50-year chart of the New York Stock Exchange, note that there were two particular tops in the last 50 years that were complex and prolonged. And those were 2000, you see this?
Yeah.
And then 2017 to 2020. And as 2000 produced a big, long, sustained decline, so will this 2017 to 2020. But skipping ahead to that point, here's the last 20 years of the NASDAQ composite. And look how, if we look closely, the 2000 top ended the same way as the 2007 top, with the NASDAQ making a new high, but RSI being lower. NASDAQ makes a new high in 2007. RSI is lower. And here again, we're with the NASDAQ making a new high, RSI is lower. That does happen in each top. But something else that I found particularly interesting is I tracked
There were a few
the
failed signals on that too, weren't there? Where you had divergences that didn't work out for a big top. I know because personally I've traded them.
right, yeah.
Okay. So I mean, in the
You
rear
always
view mirror, it's
have to
easier to
allow
see.
for that. Pardon me?
Yeah, in the rear view mirror, it's easy to see which ones were the good ones, but there are many divergent signals that fail,
Yeah.
and the market keeps running. But this one looks pretty glaring all the way on the right-hand side
Well,
of your upper screen. That's
well,
a
see
pretty
these little
glaring.
boxes here, these
Yeah.
little red boxes? Those were in 2000, 2007, and 2020 when the 20-week average of the McClellan oscillator dropped below zero. But in particular, when it did that, as the NASDAQ was actually making all-time highs. So when you get a combination of an all-time high on the NASDAQ and the McClellan oscillator below zero on a 20-week moving average, that's significant. That's very significant. That's where we are. In fact, this chart shows the 13 years. It zoomed in just a little bit so that we can see again 2007. Yeah.
Can you explain to our listeners what the McClellan oscillator is saying based upon what it's comprised of, and how do you get a zero reading?
Absolutely. The McClellan oscillator is, I think, the best measure for a market technician to see what is happening to the advances and declines in the market. The McClellan oscillator literally measures how far above the trying to remember. Oh, how far above the 39-day advanced decline line is the 19-day. So if the 19-day is way above the 39, it means that the momentum in the market is pushing up because you're getting a lot of advances versus declines.
Okay.
When the 19-day drops below the 39-day, it tells you that the advanced declines have slowed way down and are going relatively negative. So that's why I use the McClellan oscillator. A lot of people seem to use the McClellan oscillator as an indication of overbought and oversold. I don't really look at it that way. I look at it as pure momentum. It is the momentum of the market. If the McClellan oscillator is advancing, the momentum in the market is advancing, and that's going to take prices higher. When the McClellan oscillator is declining, that means the momentum of the market is declining, and that's going to pull prices lower. And that's why it's highly significant here that the 20-week moving average of the McClellan oscillator went negative this last week as the NASDAQ itself was making a new high.
Okay.
And we've seen
very narrow breadth. I think it was, at the last new high, I don't know, out of the NASDAQ 100, I think 4 stocks were making new highs.
Yes, it's interesting that, well, actually the top 5 stocks on the Standard & Poor's 500 make up now 22% of the entire Standard & Poor's 500. Just 5 issues make up 22%. And it's the same thing with the NASDAQ. The advance in this market has gotten very, very narrow and limited to just a handful of stocks. And you know which ones they are.
Yeah.
It's Apple and Facebook and NVIDIA and Tesla and Google.
You've been doing this
Amazon
for a while. It's never been this concentrated, even if you go back to the Nifty 50 days, or I don't know how concentrated it was in NASDAQ in the dot-com bubble, but I don't think it was as narrow.
It
as
wasn't.
this.
I read a study the other day that showed that in 2000, it was the top 5 stocks on the Standard & Poor's 500 made up 18% of that average. Today, it's 22% of that average, an all-time high. It's never, ever been this concentrated. You're absolutely correct.
Okay, buddy.
And that historically has always led to trouble, ultimately. So that's why I'm very wary in here, taking it very low key and waiting for the downturn. I think by the way, if you look back just over 2018, when this phenomena happened before, where we dropped below with the NASDAQ making new highs, the last 2 times were the end of January 2018 and February of 2020 were the last 2 times we had the same setup as we have now. We're back there again. But yes, it is the concentration of the, sorry about that, it's my wife's phone, and I don't know why she doesn't turn that alarm off, but anyway. So that's where we are. In a very, very narrow market, and that narrow market is spelling trouble for the market.
Are you starting to accumulate any bearish ETFs yet?
I have a light position going now, but I'm waiting for the decline to start in earnest to really move up quickly to a.
Okay, is that going to be based on breaking a support level, a price level, or I know that the Sentinels give you biases and tell you what you should be doing, but they're not triggers, are they?
They are triggers in a sense, but frankly, lately they've been switching over to sell and giving sell triggers prematurely. It's been frustrating for me. I mean, I'll be very honest with you there. That normally doesn't happen. And I think the reason that is happening now is because the breadth of this market is so very narrow that we are getting sell signals in my Sentinels while this market is still being pulled up by a handful of stocks, if you see what I mean.
Yeah, so this is pretty like everything else in our current life, unprecedented.
Yes.
Or hasn't happened in 100 years.
That's right. 2020 will be a year for the ages. There's certainly no doubt about that.
Okay, so a little whipsaw action happening with your guard that watch over you and your family, and
exactly.
So what do you do in an environment like that? What's your self-talk? Okay, you wait. Okay.
And here's why, Dale. It's because you remember January of 2018.
Yeah, I do.
You remember February of 2020. When it started down, there was no looking back. There was no question about it. It was.
Yeah, if you waited for rallies to sell, maybe there was one.
Yeah.
And that was it.
So my approach is just simply to wait for that to show itself again, and it will. It could be any day, it could be any hour, maybe it'll be a few more days, maybe it'll be a week or two, maybe it'll surprise me, but it's coming, and we're very, very close.
Okay.
Here is a daily McClellan oscillator for the Standard & Poor's, or for the New York Stock Exchange, and again you can see that as the Standard & Poor's made new high yesterday.
Yeah.
The McClellan oscillator is basically right now at 0, and the moving averages of the McClellan 13 and 34 day are at 0. There's no upside momentum left. That's the way I think of this.
Okay.
Here is the McClellan oscillator on a daily basis for the NASDAQ. And look at this. As the NASDAQ's making all-time highs, the McClellan oscillator for the NASDAQ has been slipping
Negative.
further and further into negative territory.
Yeah. So so I've noticed it just price action wise the last few weeks that NASDAQ is kind of losing a little bit of its gusto compared to the
Exactly.
S&Ps.
Well, it was just 4 days ago. You'll recall that we had, I
Oh,
think,
those earnings.
the top 4 of the
Yeah.
10 most active price momentum leaders that I look at were up between 5.7 and 7% each.
Yeah.
Then the next day they were up like the top 4 were up around 3 to 4%. Yesterday they were up like about 1%. And I'm looking at them right now, and I see that
Steady.
most of the list is down. There's only a couple of them that are even. Oh, there's only one of them that's up 1%, and that's Microsoft. So yeah, they're
yeah.
losing their luster quickly.
Yeah. Okay.
Also, you can see this same phenomena, the thinning of this market by this array. Here is the daily NASDAQ composite looking out over, let's see what time period we got about 4 months here. That's actually 7 months. And the NASDAQ is making new highs, and the Standard & Poor's actually made a new post-March new high recently, but has not reached its high of February. But look how the whole rest of the market has lagged badly. The New York Stock Exchange Composite Index is way down from its high of February, and even way down from its high of June, early June. Yeah. Same is the case for the Russell. Same is the case for the transportations. And here's something that's interesting. If you look at what percentage of stocks are over their 200-day moving average, 45.58% are above their moving averages. Let's put that another way. 54.42% of all New York Stock Exchange issues are under their 200-day moving average. When the stock is trading under its 200-day moving average, to me, that's the definition of a downtrend.
Is that a big number? 54.4?
Yes, 54%, 54.4% of the entire New York Stock Exchange is in downtrend.
And that's what, the 50-day average, Don? Is that what you said?
Pardon me?
They're under their 200 or 50?
Under their 200. Under their 200. Look at the bottom of the screen right here.
All right, got it.
That number by itself is not that amazing, but it's pretty darned amazing when you realize that the Standard & Poor's 500 just made another new high yesterday and is trading at yet another new high this morning. But 54% of all the New York Stock Exchange issues are below their 200-day moving average, in decline. They're already in bear markets.
Okay, got it.
So at any rate, I was going to show you one more thing, and then I'll we can all get on with our days here. Here is the composite for the last 13 years, making a new high. Standard & Poor's making its new post-March new high. Now take a look at the CBOE put-call ratio for equities only.
Okay.
It is clear down here at 0.49% on the 34-day moving average. That is the lowest it's been in that entire 13-year period. Same with the total put-call ratio for the CBOE. It's clear down here at 78%. It's essentially matching 2 other times when it was at its 13-year low.
Right.
Every time we got there before, boom, that was the top. If you track each time the equity-only put-call ratio got below 52 even, those were very, very important market tops and led to sharp declines. And that's where we are now. When both, by the way, the total and the equity only simultaneously get to new lows, that's only happened a couple of times. And those couple of times were specifically February.
I didn't think anything could make me more bearish than I am before the interview.
Well, the numbers are sure there. But anyway, so this is kind of a low-key presentation. I don't have anything earth-shattering to show other than we are at, I think, a very, very, very close now to a turning point.
Important. You know what's earth-shattering, Don?
What's that?
Guys like you and me are still doing this after all this time. Okay, so it's one thing to be a warrior. It's another thing to still be able to stand up and go into battle after many campaigns. And I salute you for that.
I don't know about you, Dale, but it's the thing that keeps me going. It's okay. Really having something this fascinating to do. That I put this much interest in is what makes my life just really.
We don't have to do brain teasers to exercise our brain when we're working on the most complicated jigsaw puzzle in the universe.
Have all the brain teasers we can use every hour of every day.
Well, I appreciate your work, Don, and you, and I want to thank you, my trading warrior brother, for coming here into F.A.C.E and showing people some under the surface things that normally people don't look at. So good. Thanks again, Don.
You. Well, thank you so much, Dale. I really enjoy being with you, and I thank you again for having me on.
And people that want to follow you, Don, best way?
7sentinels.com. And okay. I've been running a 1 week trial for just $7. We publish all day, every night, every weekend. All our trades, all our indicators, all our everything is in that 7sentinels.com, the individual articles every day and every night. And for $7, you can take a look at it for a week and see what you think.
Yeah, it's almost like charity.
That's right.
All right. Anyway. All right. I love you, buddy.
Almost free, as they say in Mexico.
Oh, yeah. So thanks very much, Don. And guys, check it out. You could, it's important to learn about these internal things if you're a stock market trader. And Don's one of the best to learn from. So
thank you.
That's a wrap for us. Remember, don't just count your pips, count your blessings. Adios, everyone. We'll see everyone tomorrow for investing.com Thursday. Adios.
Thanks again, Dale.
You're welcome, Don. Thank you. See you, everyone.